Hey guys, this is Simon with Trade Informed Coaching. Wanted to do a trade review for, it's actually Friday, so it's actually a slight market review of the past trading week. Due to some family issues, I have not made any trade recordings or trade reviews, so this is really going to be a little bit of a basics of how I look at the market, how I set up my trades, and what I'm looking for intraday. I'm primarily a scalper. I look for my intraday setups, and if they set up, that's great. If they don't, I pretty much don't take the trade. I generally don't have a strong bias one way or the other than to say I'm looking at what the rotations are doing, and I'm trying to figure out where I want to get my trades based off the rotations. So before I get started, past performance is not indicative of future results. This is for educational purposes only. My goal is to help other traders become better, get consistent, and not blow up, and that's a trick, right? So let's start with the basics of how I look at the market, and we'll go from there. So we're going to use ES as the platform, even though I trade CL, NQ, and ES, right? So first let's kind of take a look at what's been going on via the profile, and then I'm going to work my way backwards down to how I actually make my entries, exits, and stops when I'm trading, right? So number one, let's find the profile here where it's sitting. And since I don't want to destroy all my beautiful work, I'm going to duplicate this chart really quick. And how many days do I have loaded here? Probably too many. Let's lower that down to 100 so it loads quicker. And while it works on that, let's go through there and erase all the lines so we have a pretty chart. And I primarily use Sierra chart. And so part of my philosophy is I'm really looking for an edge of where I can grab a trade, have relatively little risk in entry. There's always a risk in entry, right? But I want to minimize that, and where I feel I have the strongest chance of making that that trade work in my favor. So generally speaking, I'm looking for traders to trap themselves on the long side and get caught long and have to come in for profit taking, or to overextend themselves on the downside as they did yesterday, trap themselves and push back up. And that would pretty much encapsulate how I look at the market. So let's start off number one. You can see the market has just been on a tear since December 20th. We've pretty much been, it hasn't quite been straight up, but it is very much been an up market, right? So there's a couple things that I look for when I'm trading that'll help me, make trading decisions as I'm going through the day. So when I come in, let's take yesterday for example. Number one, I can see that I'm one timing to the upside. So again, I'm going to start these very basic. One timing to the upside simply means we have an inability to trade below the prior day's low. And you can see going back to the 29th, we simply have not traded even a tick below the prior day's low until the 6th, right? So why was that important? You can see even though we traded underneath the low of the 5th, we traded back in and closed. But that often indicates that there's a potential change in the character of the market, and that's what I'm looking for. So after I get that initial change in character, right, then I'm looking for a setup from there. So number one, before we go into great depth about my view on the market, what the market generally likes to do, if you look, and this is just Dalton's work on TPO profiles, the market likes to go from finding buyers to sellers and from balance to out of balance. So when the market's tight like this, where you have 2 days in a row, the blue area is called the value area, and where the value area is just sitting tight, you'll see if we sit there for 2, 3, sometimes 5 days in a row, the market will make an extension out of value, right, looking for new sellers. What the blue lines are on my chart are places where it's called points of control. Both volume and TPO profiles where there's naked points of control. And the market likes to travel to those points, re-examine those locations, and then generally you will find responsive buyers in those areas. That's a rule of thumb, right? So what you will find is that these areas tend to act as magnets, right? So if we look back to the left, for example, when we were down here, see how, let me see if I can draw this back for you really quick, because it's important to understand. So see when we were down here, see all these areas where there's naked volume points of control. I'm just going to tag them with a line without doing anything fancy, right? But what you will see as we're going up is that the market tends to tag those areas as general directions of where it's headed. Again, this is very broad in terminology, right? So I'm not being very specific, but what you'll look at as we come up is you'll see the market starts to target. So we target, we hit the point of control, the market tends to stop and fall off. Doesn't every time. It is not the method by which I use my trade entries. They're just general targets. You'll see each time we hit one of those little yellow areas on the way up, we tend to reject, right? It's not perfect, but it's close, and it gives me a general area to go, hey, this is where the market is generally looking to go. And you can see it pretty much follows that, that model, right? So that being said, the next thing that I'm looking for example, when I'm setting up the chart, is I'm looking as to whether the market is trading above value or below value. It's a very simple concept. Value is simply defined as where the market spends 70% of its time or 70% of its volume from the prior day, right? So if we're trading below value, I look for potential larger extensions to the downside. If we're trading above value, I'm looking for larger extensions to the upside. Again, that's a rule of thumb, right? But what that helps me with is if I open up and I see that we're holding above prior day's value, I don't get overly aggressive on the short side. Conversely, if I'm holding underneath value, as we were today, I understand that we have a stronger odds of trending in a particular direction. Whether that direction be up or down doesn't particularly matter to me. Okay, so that is the basic outline of what I'm looking for. As of right now, and I'm going to address this just really quickly, if you look at ES, there's a couple of important measures to figure out whether or not the market is bearish. So one of the simple things that I do, and it surprises me how many people don't know this, see how this ended up being a swing high over here to the left on the 18th, and we rolled down, and on the 23rd we ended up with a minor swing low, right? So one of the ways to measure that is you take a 50-60 retrace, right? You draw from high to low, and what this does to me is if I know if we do not close below on a daily basis, if we do not close underneath the 50-60 retrace, which is sitting, that's the 50, this is the 60. If I'm not underneath the 50-60 retrace, I already know that buyers are in overall control and that the market's in no way ready to have a big extension or push lower. And just to rewind a little bit on that and keep it short, when markets break down, they tend to get easier to short once they are already broken. So you'll see as we pushed up here, this is a good example, right? So let me go back a little bit here. For those of you who think the market's going to roll over and I've got to be aggressive on the short side. So see how this ended up over here being a swing low, pointing to this area right here, back on 1122. You see we pushed to a swing high, and we were one timing to the upside. Anyone who shorted in this area really had a very difficult time making their trades work, right? So if you'll look and you'll take a simple 50-60 retrace from that swing low to that swing high. Okay, so this area right here ended up being 50-60 retrace. Now, if you'll take a simple look as you move across to the right, what you'll notice is once we closed behind that 62 retrace, that's where shorts got really, really easy. Now, I'm not saying it's always easy or that that's the rule that always holds in place. All I'm saying is once you're behind that 62 retrace, the most recent swing up on the day time frame, trades to the downside become much, much easier. They get faster, ranges expand to the downside. And so just to bring that to our current picture right now, if we don't get behind this 2660 on a closing basis, right, I'm not looking to be short, pure and simple. And then lastly, these little areas are called anomalies, very small little areas, and they tend to provide areas of support and resistance where I can really pinpoint what I'm looking for. So now, what that translates into, for example, is this is today's chart. Here, I'm going to minimize this. All that work translates into specific support resistance. Again, usually I'm not trading overnight, tonight I am, but as you can see, that generally translates into a hold on one sec, I gotta make sure that I have potential trade set up here, and I don't have that yet. And I need to figure out, that would be my setup. And so when I'm looking at trade location, right? So you can see even from overnight, see how we pushed up. This yellow zone represents an anomaly. You can see we pushed up into the anomaly, came into it, got a rejection, and this little move right here for me would be a valid trade and provide all the capital that I'm looking for in terms of a trade. I tend to trade concentrated positions on a short-term basis. And then my targets above, for example, if I established a long or I got a long setup here, I'd be looking to come up to 2702, 2704, which is also yesterday's value area high. Beyond that, the light blue areas are areas that there's still resistance, but I think that they'll be more easily broken. Again, that's based on 20 years experience of looking at profiles, and I kind of just make judgment calls. The purple lines are value area high, value area low, and the white zones I expect to act as very strong support and resistance areas. Okay, so now let's go to a particular setup, or how I actually go in. What I'm actually doing when I'm trading is I'm looking off to the left to see where my support resistance levels are. But I'm actually using a very small one range chart, and I have a certain set of indicators on here that tell me where there's strong pushes to the long side or to the short side, and I'm looking for those trades to set up for me so that I can take advantage of those setups in real time. And I apologize, I'm a little bit tired. I haven't been at it for a couple hours now, trade-wise, right? So what I'm looking for, as you can see, is I use those little squares, little triangles at the bottom there to set up my trend lines. And I'm looking for a break of the trend lines, and what that ended up looking like yesterday at the low, which is a good example. So we were pushing down into support. I want to show you around. What ended up being yesterday's low and value area low, there's a support area right below here. The white zone still exists. This is the area where I expected a major response, right? So you can see over here how what I'm looking for is to get pushes down at the bottom. I'm looking at these fractals to set up at the low, right? And what I'm looking for is as these get broken, right? And then this show me what my delta looks like in terms of a waveform, right? And then what I'm looking for at the low is to get final pushes down and to get above those pushes for pushes away. So a perfect example would be, I know I'm near support, I'm getting a big push down. See how I don't get any of these little orange signals, basically my algo firing off telling me where I'm getting buyers and sellers. And I'm not looking for the buyers, I'm looking for the sellers to push down. And then I'm simply looking for them to close above these levels, like I did right here, right? And that ends up being a long trade for me and a push to the upside, right? And you'll see we set up again later in the day. So see how this becomes my last push down again. I'm not looking for the buyers, I'm looking for the sellers. So when we close above, this is where I end up initiating my longs, pushes to the upside. Then you'll see as that trailed up, once again, I'm not looking for where my sellers are for my shorts, I'm looking for where my last buyers are. So you can see once I close underneath, I tend to get quick sell responses to the downside, and that is what I'm looking for. Now, it's not a perfect world. Sometimes I'll get to the bottom and I simply won't get a push to the downside. I won't get a fractal print, and I tend to I'll usually miss that trade, right? But I'm all right with it. The whole point behind this entire setup is for me to get entries and exits where I have very tight stops. I can get relatively quick extensions up or down, and I don't have to sweat getting run over one way or another. That gives me the luxury of two things. It lets me set up my trades on a leveraged basis, right? And it lets me pinpoint my entries. And also what you'll tend to notice is when we're pushing down and in a free fall like we were yesterday, see how my pushes to the upside if I mark them up? See how I don't have to guess because we simply never can close above those points. See how I'm looking for a green bar or a positive bar with the point of control above. And I'm simply not getting that all the way down, right? And see this threatened? That was a green bar. You can see the outline is green, but it never actually closed with a bar to the upside. That was green. And I want to show you why it's important. See how it never triggers and never gives me a long to right over here. So look at why that's important, because if you're looking on the downside, right, we started pushing all the way from 27.10, and I don't get a long signal all the way back until 26.90, right? And it saves me a ton of pain when the market's in a free fall, right? So long story short, I'm watching the delta, right? I'm watching for sellers to come in and press near the lows and fail, right? And then I'm looking to take advantage of that. And then the last component is I'm looking for rotation size, right? If you look at the last couple of days, there just wasn't a lot of rotation up and down, and there was persistent buyers. Yesterday was the first change in character, right? So we knew that the range had expanded, and I'm looking for a wider range instead of that certainty where you're getting 2 or 3 points down and they're constantly winding down. I'm looking for the opposite direction now. I'm looking for them to come in and instead of being able to buy a 4 or 5 point rotation down and get a rotation up, I'm looking for a 10 or 15 point rotation down, and then looking for sellers to get trapped. Again, a lot of the work is done for me by understanding the setup. This is what I coach people to do, so that when I'm working one-on-one with people, the thing that people have the hardest time with is, well, how do I know where to take my trades? And the whole point behind that is, and again, I'm going on a little bit longer than I wanted to, so I'm going to wrap it up, but this is important. The whole point is to pinpoint your trade location. No matter what you are looking for in terms of a trade, the goal is not to trade everything in sight. The goal is to get yours specialized in a very specific setup, right? So I'll give you an example. This is a long for me, right? We had the last press down, closes above. My stop goes back over here, right? Potentially. My stop goes back there. Sometimes I'll keep it tighter, but usually it goes back over here. I structure it correctly, and then I get the stretch. And then I'm looking for, right, a close or a push back up into a key location based off the profile, or an exhaustion type of setup. And I have multiple ways of reading those exhaustion setups. So, anyways, that's my 2 cents. This is my first time I've done a trade review in quite a while. I'm looking for two-sided markets. I'm not looking for the market to roll simply to the downside, right? I'm looking for traps at the lows because I think there will be responsive buyers. And I'm looking for my final sellers at the lows to push markets back up. So at this point, I don't have a setup here in ES. I'll come and take a quick look at NQ. Still early in the morning, but I don't have, if you'll look here, what I need is see this bar right here? What I need, let me erase my lines. Okay. So here's my trend line. Down, I've had that broken. What I need is a close above this point. That's 67.75 for a pushback up into 68.99, 68.96, and then extend it up to 69.08. A close underneath this point, underneath 68.64, would bring us back up for a test at the low, and then structures down below 68.40. Hopefully we don't get that. I prefer to see a push up first so I can get a good short location for a roll back to the downside. Anyways, that's my 2 cents. My name is Simon. I'm with Trade and Perform Coaching. If you have any questions or you'd like to join us in the room, send me an email to tradertough@gmail.com, and I'm happy to extend you a 5-day pass. Have a great day, guys, and hope y'all kill it. Again, no bias going into the day so far.